Pakistan's gross domestic product and per capita income rose modestly in dollar terms, suggesting a partial recovery in overall output from the previous year, according to figures released by the government on Wednesday. The economy is now expected to grow by 3.7% in the current fiscal year, down from the earlier projection of 4%, indicating that Pakistan is likely to miss its official GDP target. Provisional estimates show agriculture growing by 2.89%, industry by 3.51% and services by 4.09% in FY26. The figures were presented at the 117th meeting of the National Accounts Committee, held at the headquarters of the Pakistan Bureau of Statistics and chaired by the Secretary of the Ministry of Planning and Development. Pakistan's economy expands to $452 billion in FY26. Per capita income rises to $1,901, though living standards remain under pressure. The committee's estimate broadly aligns with projections by multilateral lenders. The International Monetary Fund expects GDP growth of 3.6% in FY26. The World Bank has forecast 3%, the Asian Development Bank 3.5%, while the State Bank of Pakistan sees growth near the lower end of its 3.75% to 4.75% range. The NAC also approved quarterly GDP growth rates for the first 3 quarters of FY26, along with final and revised annual growth figures for FY24, FY25, and FY26. The size of the economy increased to $452.1 billion in FY26 from $410.96 billion a year earlier, led mainly by the services sector, followed by industry and livestock. Per capita income edged up to $1,901 from $1,824 in FY25, based on the 2023 population census. However, the increase offers little comfort. Per capita income stood at $1,551 in FY23, $1,766 in FY22 and $1,677 in FY21, but persistent inflation has eroded purchasing power, leaving little visible improvement in living standards despite higher nominal incomes. The committee also revised first and second quarter FY26 growth rates upward to 3.92% and 4.05%, respectively, from earlier estimates of 3.63% and 3.89%. GDP grew by 3.99% in the third quarter, while the final and revised annual growth rates for FY24 and FY25 were recorded at 2.62% and 3.18%, respectively. The agriculture sector posted modest growth of 0.65%, reflecting mixed crop performance. Wheat production rose 4.3% to 29.6 million tons, rice increased 2.8% and sugarcane output jumped 6.2%, while maize fell 2.68% and cotton slipped 0.5%. Other crops expanded by 2.43%, supported by strong gains in grams, potatoes, mangoes, bananas, turmeric, and chilies. Cotton ginning and miscellaneous components grew by just 0.07%. Livestock, the largest component of agriculture, grew by 3.75%, while forestry and fishing recorded growth of 2.02% and 1.66%, respectively. Industry grew by 3.51% in FY26. Mining and quarrying rose only 0.38%, as higher coal output was offset by declines in natural gas and crude oil production. Large-scale manufacturing, based on the Quantum Index of Manufacturing for July to March, expanded by 6.11%, supported by gains in food, tobacco, petroleum products, rubber products, electrical equipment, and automobiles. The electricity, gas, and water supply sector contracted by 10.63%, largely because of a high base effect, reduced energy subsidies and slower output growth by WAPDA and other companies. Construction grew by 5.73%, driven by higher spending from both the private sector and the government. The services sector remained the main driver of growth, expanding by 4.09%. Wholesale and retail trade, transport, information and communication, public administration, education, health, and other private services all recorded positive growth.